So next slide, please. Like I said, today we'll have a few welcome and introductions. I'll also present the AfriConEU project. And then we're going to have a presentation from Angie Mandara of Athena Fund on alternative funding sources for digital innovation. We'll then have a group discussion. I don't think we're going to break up into focus groups this time, but we'll have a group discussion and a Q&A. And then we'll have some closing remarks. And we have a few sort of updates to share with you. So quickly about ATBN, like I mentioned, my name, one of the directors there. And we are an organization working to enable and support inclusive digital transformation in Africa. We work across 3 pillars of work. Could I get the next slide, please? Patience, could I get the next slide, please, if you don't mind? Yeah, so our 3 pillars of work are gender lens innovation, where we provide programs and expertise around driving gender inclusion within the digital economy. So we've run programs, we've designed accelerator programs, we've done research, and we were part of a project called the Coalition for Digital Equality, which we helped to set up, which was around how to create systems change around supporting more women in Africa to benefit from the digital economy. We also focus on innovation ecosystems. So we provide research and expertise. And actually, as part of the AfriConEU project, we did a 6-month research into the digital ecosystems in Nigeria and Ghana and Uganda and Tanzania to understand where the opportunities and barriers are for digital innovation, as well as collaboration with the UK. And lastly, our 3rd pillar is trans-continental partnerships. So we are a London-based organization, but working to support and working with partners across Africa, and really around strengthening knowledge sharing and synergies between Europe and Africa. So that's us in a nutshell. If I could get the next slide with, these are some of the partners we work with, some of whom you'll see on this call. A lot of them are part of the AfriConEU Consortium and some of the funders who supported our work. And on the next slide, you can see where I think, where you can connect with us. It's probably one of the last slides. So unless there is, please do type in the chat if there's anybody from Outbox. Otherwise, I will go ahead to share my screen and do the AfriConEU project introduction very, very briefly as well. Before we welcome Angie. I want to leave as much time as possible for Angie's presentation and for the questions that will follow. So just bear with me a minute while I get this presentation up. Okay, hopefully you can all see my slides. Yeah. So this webinar is organized, as I mentioned, as part of the AfriConEU project. AfriConEU is the first trans-continental networking academy for African and European digital hubs. So we're trying to connect Europe and African digital innovation hubs for capacity building, knowledge sharing, networking. We want to see joint projects, collaboration happening, and ventures across both of the continents, finding opportunities and sort of sparking new innovations within this. It's a 3-year project. We started in 2021 and will be going on till 2024. The main goals, like I said, is around knowledge and experience sharing, building mutually beneficial partnerships, and creating joint or collective projects, particularly around boosting digital economies, empowering youth and women, and fostering innovation and growth. A lot of the sessions we'll have our partners or people coming in from European ecosystems. We also have our speakers bringing in those perspectives. Particularly today, Angie as well has set up a business in the UK and successfully exited a business in the UK, and is actually originally from Kenya, so has that knowledge of that space as well. So, you know, speakers like this that can sort of bring insights from both ecosystems is really at the core of this project. These are the members of the consortium. We're 11 organizations seven across Europe and 4 in Africa, as you can see there, Uganda, Tanzania, Ghana, and Nigeria. But we do have participants, and we are looking for collaborations across the both continents. So if you're outside of these countries, we are very, very happy to have you here, and we would love to also continue to collaborate and share our knowledge. We've been through this 5 phases to the project, and we're now in the phase of rolling out, phase 3 of rolling out this project. But we initially started with a state-of-the-art analysis to understand what the needs were around digital innovation, particularly the needs of digital innovation hubs. We then designed these sessions that you are part of today to based on the needs that we found, and now we're in the process of rolling out. So like I said, every month, if you go to the AfriConEU website, you'll see what sessions we have coming up, organized by various partners, of which ATBN is a part. And like I said, there's 2 sides to this. One is the learning, so the academy side, where we are hosting webinars. This is one of them. We have masterclasses, we have local workshops happening in each of the 4 African countries. And we also around building networks. So we had an international brokerage event in Bologna, Italy, and we're going to be having 4 boot camps, 1 in each of the 4 African countries, happening next year. So again, join our newsletter, follow us on the website to be a part of that. And then at the end, we'll have a capitalization event to kind of consolidate all the learnings and networking that has been built across the 3 years. I won't go too much into this, but basically we have, based on the research that we did around where there's capacity needed to strengthen digital innovation, and particularly for digital innovation hub leaders, we found 4 themes. And particularly the theme we're focusing on today is part of the 3rd theme, which is startups financial support. So really trying to understand and better equip hub leaders, but also sharing knowledge within the ecosystem on how startups can access better financial support. So today's session on alternative funding sources is aimed at exposing and giving you the tools to, if you're a hub leader, to better raise awareness to the hubs within your programs about the alternative sources of funding they can tap into. And if you're an entrepreneur as well, to kind of give you an insight into the sources available, but also the pros and cons. And with us, we have a serial entrepreneur who's going to share from her experiences, sort of navigating and thinking about how to go about making these decisions. And not only is Angie an entrepreneur, but she's now establishing a fund as well. So she has the investor perspective and the entrepreneur perspective and the Europe perspective and the Africa perspective. So like I said, we couldn't have found somebody better to run this. I won't go through this because I already talked about them. We have the events happening across the themes and the various networking opportunities that we'll have happening. And this is sort of the timeline leading up to the end of our project. So yeah, there's a lot of information there. All our activities are free to attend. You can find them on our website, africon.eu. You just need to register, and we usually ask you only to kindly share your feedback with us so we are able to track the impact that we are having. So that is it. That is the AfriConEU project, and you've heard about ATBN. And now, without further ado, I would like to stop sharing my screen. Angie, I hope you have co-host abilities. Are you able to share your screen?
Let's see. No, I don't have.
Just give me 1 second. Patience, could you make Angie a co-host so she can share her screen? Because I can't seem to do it. Is that done, Angie? Can you do it? Can you share now?
Yes, I can.
Perfect. So, ladies and gentlemen, please allow me to welcome our speaker for today. I'm not going to attempt to introduce you because you have a very impressive bio. I hope you guys saw it on the event brief. So Angie, welcome. And yeah, please start by introducing yourself, and you have the floor for the next half hour.
Thank you so much, Eunice. I'm trying to share my screen. It's giving me a weird pop-up.
What's it saying?
Advanced sharing options, who can share? It's not giving me the ability to actually share.
Oh, you've made her the host. No, make her co-host, not host. Anyway, it doesn't matter. Now you're the host, Angie. So,
Oh, okay.
so you should have everything.
Got it.
The power.
I hope you can see my screen.
Yeah.
Let me move this to the bottom. So just to give you a brief intro about myself, I'll try and summarize. It's not a wow, as Eunice has made it.
Wow.
But I am an entrepreneur. I've been fortunate enough to start 3 startups of my own. I've also had a very long experience in product development, nearly 15 years in product development. And most recently, I have transitioned into the investor side after exiting my startup in April of this year. And besides that, I work with accelerators and incubators and hubs to help bring the gender lens perspective to get more women to start tech ventures and to hopefully get them funded at the end of that journey. So I'm very happy to be here with all of you. And today you're going to get like a brain dump of everything that I have seen, everything that I've gone through, and things that I haven't tried but seemed interesting I couldn't try. And I hope by the end of the session today, you will be able to figure out what step to take next. Which side will you go to if you want to raise funds? What are the things you need to consider, and hopefully make an informed decision before going to the next step of fundraising, which is a big task on itself. I think it needs to be like a job description on its own. But being a founder, you have to wear many hats. So you're fundraising as well as running your business. It can be very, very complicated and a bit difficult to navigate. So today, we are not going to talk about angel investing or VC investing, because I think you've had enough exposure around that. I'm going to try and touch on the other investment channels, instruments that you can tap into, and hopefully give you some insights of the same. What is here? I know this, I don't have to say it. It is so difficult to develop your prototypes, to get that MVP. It is difficult to hire experienced staff, to deploy your marketing strategy, and many more, and you need money to do this. And we all know it takes money to, deliver this great product that you have with you, but unfortunately, it's not easy to get that money. And as founders, we have this mentality, oh, how can I get money fast? But unfortunately, nothing works fast, right? And in my honest opinion, I would say bootstrap as long as possible so that you retain 100% of your shares. And bootstrapping doesn't necessarily mean that you rely on your personal savings. To me, bootstrapping is just simply saying no to external investment for as long as possible and exploring different ways to bootstrap your business. Takeaway point, keep 100% of your business as long as possible. Don't rush to fundraise and you give out so much too early, because if you do, investors stay away. So as much as possible, try and, get as much as possible from the little that you have. Use your connections, your networks, and alternative channels to get you to the next level that you need to get investors attracted to your business. Now, if you decide to go beyond bootstrapping, at least these days, there are more funding options for you. And Africa is an exciting market. Everything is evolving. There are new things coming up. So I believe if you have a good business, you will not lack the investment that you need to get to the next stage. And I can move to the next screen. Okay. So today we're going to touch on a few different alternative channels. And the first one we're going to talk about is grants. And for me, grants have been an integral part of the start of my business. I applied for so many grants, unfortunately got 2, but it made a very big difference in, getting me to the next level. At the beginning of my business, I was even thinking about, why don't I give out equity to get people to run some certain tasks? I didn't have a software engineer, so I was thinking, oh my God, what do I need to do? I don't have money to pay this person, but I need to remunerate him. So should I give like a portion of my equity to get a software engineer on board, to get a marketing guy on board? And I'm so happy that I didn't, because I explored the grants route. The grants that I've seen in the African market are mainly around agriculture and more so towards climate resilience, thinking about climate smart agriculture. And there's also a very big trend on grants around education, grants around health, grants around nutrition as well, especially for children, and of course, financial inclusion. But all in all, the grants ticket size are increasing, and the number of grants are increasing for Africa, which is contrary to all the other markets. I think Africa right now is booming for any type of investment, and that includes grant funding. So why go for grants? Grants is, in effect, free money. You retain your equity. You don't have to part with your equity, which is super important for our founder. You don't have to pay it back. And there is a waterfall effect, which means when you get one grant, it is more likely that you'll get other grants, because usually they follow the same way of the same format of applying. So you kind of figure out how that works when you get the first one, and it will be easier for you to get others. And when you write in your website, when you publish your article or your social media post that you did get a grant from whoever, it's a positive for all the other grant makers to pay attention to. So there is that waterfall effect in that aspect. And of course, there's increased visibility, because the grant funders themselves will publicize this. Last week, I was on a panel with UNCDF, and they have a grant. They were giving a grant for Web3 innovations. So everyone that applied, their names were listed, and the ones that were chosen to get the grants, their name were listed. There was this whole workshop around it, and there was lots of visibility. And of course, they tie into their other funders, other co-funders, and other partners. So you will get that visibility, which is instrumental. The cons, however, it is time. You need a lot of time. It is so much time that there are people who have formed businesses to create grants for startups. And I can intro you to some of them if you want. But it takes a lot out of your daily work. And, this can steer you into a different direction, and, everything remains up in the air. It is a lot of time. There is huge competition. You can imagine someone like USAID, they get thousands and thousands of grant applications when they put that call out. And you have to make sure that you check all the boxes so that you stand out from the competition. And of course, there are restrictions when it comes to grants. If anything changes in your business, you will find it hard to go back and explain to them why you changed, why you're not using the grant money that they gave you for the task that you said you're going to accomplish. It is also, in the same light, stifling any sort of innovation. You see, as startup founders, we are highly adaptive. It is in our nature. If we see an opportunity here, we explore it quickly and fast before a competitor does it. But unfortunately, you cannot use the grant money that you get to work on something new. You have to look for other sources of funds to do that. And sometimes because it is hard for us to constantly get additional sources of funding to do X, Y, and Z, we sort of remain in that trajectory, that line that we said we are going to use the grant funds for. So it's a stifling situation to find yourself in terms of innovation. And it was also a very big factor. And I remember there was a very big workshop around it of how COVID has affected grant funding. Because prior to COVID, people received grants to do specific things, but things change. Inevitably, things had to change and people had to adopt. But the grant funders still wanted whatever it is that they were funding you for you to accomplish it. So some of them pulled back the money that they had given the grants for, which was totally unfair because it wasn't intentional that founders had to change. And this kind of created like sort of a shift. And I don't think it has changed even with that, even post-COVID, because once they give you money for whatever it is they're giving you money for, you have to stick within those rules. Interesting funders to look out for. I won't talk about the USAID or UK aid or FCDO because I believe you guys know what they're doing, but I'll talk about some funds that people don't pay attention to but are really good. And that is the African Development Fund by the African Development Bank. And they give out between 100,000 to about $5 million US. So it's a very good a fund to look out. There is also the Africa Enterprise Challenge Fund. There is, I think the Africa Enterprise Challenge Fund is Western Africa. So have a look at that if you're in West Africa. There's the African Women's Development Fund, which is super important for women entrepreneurs. Have a look at that if you're a woman and you're here. Look at Foundations, which is a Nigerian-based one. It is for Nigerian startups, so that's a good one. And sorry, the next one is the Nigerian-based one, T.Y. Danjuma Foundation. It gives out small funds, but it does make a big difference. It gives out between 5,000 to 150,000 US. And for a long list of funds that are open, have a look at fundsforngos.org. They have like a weekly newsletter with different sorts of funding. They have a repository of notes of how to do your grant funds. They have the different grantors and what they look for. So it's a good resource to have. And by the way, if you have any questions, do put it on the chat and keep the meeting, or you can hold it till the end and we'll talk about it. The next thing that I feel we need to touch on is accelerators and incubators that have some money tied to the program. And this is seeing the generic accelerators and incubators slowly dying out. We are seeing more specialized incubators and accelerators, for example, Ingenie, which is just for EdTech. Grasa Machel Trust has just an accelerator for women tech entrepreneurs. There is also a shift. Instead of the long timelines that accelerators have, there's also the rise of boot camps and master classes where you can just go in and learn that particular thing and move out. So it's like you dip in and out depending on your need. Amazon have a great one that's exactly like that. They don't have classes. And the AWS for startups, there is an African chapter, and they don't have classes or workshops like accelerators. They tie you to your business partner, and that business partner gets you help whenever you need. If you don't need help at a particular time, then you don't have to do anything. But if you have challenges with your tech, with marketing, you go to your business partner and say, can you connect me with someone who will help me with my AI? And they use Amazon staff to help you, or the networks that they have built as Amazon to help you, which I think is fantastic. I was part of that accelerator, and I think it's one of the best accelerators I've been to. So have a look. They don't give money, but it's a good accelerator. Also some accelerators that I honestly feel are time wasters. And in the past few years, there has been a proliferation of accelerators across Africa. I think right now we are at 600 accelerators spread across Africa, and more have been set up just the past 2 years. Like there was a spike just the past 2 years, the more coming up. And some of them, to be honest, are just accelerators. When you, time wasters. When you sign up for an accelerator or you get that invitation to apply, please have a look at who's running those programs. Some of the people who run those programs have never even created a business by themselves. So it's only theory work you're going to learn. And we all know it's so different between what you read in books and what you experience real life. So have a look at who's running those accelerators and their experience. Have a look at who has been part of that of those accelerators, and reach out to them on LinkedIn and ask them if that accelerator was beneficial for them. Just do your research first before you sign up. And lastly, have a look at the investors who come to the pitch demo days. Some of them are not even investors to begin with. So you're pitching to someone who's just listening to your pitch, which is a total waste of your time. We want people who are going to write us checks, right? So look at the investors who come for those demo days. Make sure that you have done your research before signing on to these accelerators. The pros is that the good ones have really strong links to investors, or they come with a check. And that is what we need. We need someone who will write us that check, right? Being part of a good accelerator gives you like a positive signal. I remember when I was fortunate enough to attend the Cambridge Judge Business School. I was there. Eunice attended the school at the accelerator prior to me, but having that badge, you know, when you write your email and it's at the bottom, there's your sign off, it's written supported by Cambridge Judge Business School, Cambridge Social Ventures, you know, immediately people change their perception of your business. They're like, oh, wow, this guy is actually serious. If you have, they're supported by AWS for startups, people change. If you see supported by Google, people change the perception of your business. So make sure you find a good accelerator. Don't just attend accelerators for the sake of attending accelerators. And, you know, accelerators give you a safe place to benchmark your startup, because it's likely that you will attend the accelerator with other startups within your industry. So my business was an edtech startup. So I was fortunate enough to form links with other edtech startups, see what they're doing, learn from them, share our experiences together, which I think is quite invaluable. And of course, there is also increased visibility when it comes to accelerators. All of them will put out, you know, publications on who they have accepted into their cohorts. So it's a good thing for your visibility as well. On the downside, it takes, again, a lot of your time. You know, so most of the accelerators run between 6 to 12 months, which means every week or every other week you have to attend those workshops. And it can be in times where your business is really, you really need to focus on your business, but here is a class, another class you have to attend. And that's why I really loved the AWS for Startups, because it was very flexible. You only go in when you need help. And one thing that used to annoy me, and it still does, is that there is no distinction between the stage of startups. Whether you are starting off with an idea alone or you are 2 years down the line, you're all lumped together in one class. And sometimes you find the things that you're learning are beyond you because you're just starting off, or the things you did 2 years ago. So it needs, I think most accelerators need to adjust to the stages of the startup. And if you go for a poor accelerator, of course, it will, you're going to damage your credibility, and also look out for the credibility of the people running these accelerators. Now, for the interesting part, accelerators that come with checks. Look at GIZ's 500 Global. Techstars come with checks. Google for Startups, which launched last year in Africa, come with a check. Antler launched also last year. They come with a check. Y Combinator, I'm sure you all know of it. It's a global accelerator. They do come with a check, and they have really strong connections to investors. And once you're in Y Combinator, you get picked up by investors like that. But the thing with Y Combinator, which I find, it's like a double-edged sword, right? If you don't receive funding within the first year of exiting Y Combinator, people start questioning what's wrong with your business. So it also needs you to be aggressive in acquiring that funding at the end of your time at the accelerator. There's also 500 startups. Have a look at that. Let me see if there's anything hidden. No. So have a look at those accelerators that are in Africa and come with a check. Challenges and competitions. And post-COVID, we have had a lot of these types of challenges in Africa. And again, just like grants, they're mainly focused on, for Africa, that is, they're mainly focused on education, agriculture, health. In Europe, the challenges and competitions are totally different. They're focusing more on green energy, space exploration, beyond our basic needs. In Africa, we are still catering for our basic needs, which I think is super important. There was one of my mentors told me the other day why he likes investing in Africa. And I laughed because he said, in Africa, we solve real world problems, while in the developed countries, they solve for what ifs. So he gave me a very interesting example. In Africa, he was looking at business that was getting water from dry air. Water is life-changing. We all need water to survive, right? So that's super important for Africa. But in Europe, because he invests both in Africa and in Europe, and in Europe, he got a pitch deck of someone who was transforming mushrooms into leather for making handbags and shoes and belts. The difference of what Africans solve for and what European startups solve for, it's quite interesting to put it in that context. But again, with challenges and competitions, this is free money. You don't part with your equity. And it is a benchmark because it is a competition. You're competing with other startups. And if you emerge top, if you're picked, it clearly shows that you're the best of the best in your category. There was in EdTech, we had a competition, startup awards, global startup awards, and they do it per continent. So there was the Africa one, a Europe one, a European one, and America's one, and the Pacific one. And my company emerged top. So we were the best edtech startup in Africa. And that was something that changed the game for us. So when we approach an investor, we go to them, we're like, hey, we're the best in Africa. Let's talk. That kind of completely changes your ball game. You're no longer playing little league, you're in the big leagues now, and that perception completely changes. And of course, just like the others, there's a lot of exposure and networking as well. With the cons, that it is a lengthy process. Some challenges, require you to write over 30 pages worth of, of your project and how you're going to change the world. It is a lengthy process, and with all lengthy processes, it distracts you from your main business. And I think, if I'm not wrong, EY have a team that helps startups write challenges. And they go in as your partner, and they use the challenge funds to pay if you do get it, they use the challenge funds to pay themselves. So you're not paying them directly, but it also gives you a bit of credibility when you're approaching these funders who run the challenges. If you're going with someone like EY, was it EY or PwC? I can't quite remember, but I will get the details. But if you go in with someone like EY or PwC, man, you're no longer like all the others. You're someone who's the top of your game, which is super important, and they do help you write that proposal for your challenge. And another con with competitions and challenges is that your focus kind of changes. You tend to think more about what the funder wants instead of focusing on your customer and how you're going to make their lives better. So we try and mold ourselves into what the funder wants to see, rather than sharing what you're going to do and how you're going to make people's lives better. And of course, read the fine prints. I've seen some very tricky challenges and competitions there where they do still want your investment. They do still want your equity. So please have a look at that fine print. There are also some challenges that require you to use the funds by X date. If you don't use the funds by a certain date, then some of it, the rest is plowed back. So please read the fine print before signing anything. And of course, it is highly competitive, so you have to present the best. Some interesting and big challenges and competitions to look out for. Of course, we all know about X Prize. Lego Foundation do one specifically for education, and this is big. It's 30 million prize, $30 million US prize. The UN has the SDGs Global Startup Competition, and it comes with, I think, 1 million check. There's Extreme Tech Challenge. There is also pitching competitions that do come with checks. I've won a pitching competition, 10,000 USD, little, but it made a big difference. I know someone who's won a $1 million US pitching competition. And hers was very tricky because she only had 1 minute to pitch her business. So look out for these pitching competitions that come with checks, because that can set you apart. There's also GSMA who run 2 of them. There's a Jump Starter and the Global Mobile Awards, and they do run this every year. And I think just about now, if not end of December, in January, there'll be a call out. So have a look, and they do focus on, of course, education, agriculture, health, financial services. E-commerce is new, but those are the 5 that they do focus on. So have a look at that as well. Now, I think most of us are very keen on hearing about crowdfunding, because it's something that's picking up in Africa. And just to start off, there are, I think, 4, maybe more. There are 4 different types of crowdfunding. There's crowdfunding that's donation-based, where when you raise money from donations, you raise money for small donations. For example, there's a big crowdfunding startup called Mchanga that used to do that. So it's not really for business, so I won't touch on it. There's reward-based crowdfunding, where the funders who fund you through the crowdfunding get some product or services from you. And I'm not going to touch that. I'm not going to touch on that as well, because it's not really popular, or it hasn't picked up in Africa. I'm going to talk about the last 2, where you do crowdfunding in exchange for equity or debt. And I'll start with the debt one, because I think many people overlook it, but it can be good because you get to retain your equity. And this is growing, and it's becoming more and more popular there's a shift between P2P, lending to business, and of course, also the ticket sizes are growing. Now, the good thing about this is that there are low interest rates. So they won't give you an interest rate like a commercial bank. This is you and I, agreeing on what we're going to, how much I'm going to give you and for what returns. So it's usually really, really small. There is a very big shift with startups like Pezesha and Kiva getting diaspora money to lend to businesses. So the ticket sizes are also increasing, which is a good thing for us. With this, I've seen it being interesting in funding smaller tasks. So for example, if you're a logistics business, maybe you need to break down, instead of coming in with this big figure, I'm raising $450,000 US, you break that down. So maybe you need $20,000 for IT equipment, and you put that as a task, and then you raise for that, and then the next one and the next one. So it builds up to the amount that you eventually need. And with this, you don't have to go in with already committed funders, like the normal crowdfunding in exchange for equity, where people usually go in with funders already committed, so that you gain that traction from the very beginning. I've said that you retain your equity, and it is a very good tool because it helps you manage all your investors. For every task you fundraise for, you'll get over 100 investors, and it can be challenging for you to manage each one of them individually. But with this, the platform takes care of that. This is still very new, and in Africa, we are still skeptical of each other. If I'm giving money to you, I need to know you, I need to understand what your business is, I need to do a lot of things before I'm comfortable with giving you my money. But it is growing. There's that shift slowly coming, which I'm here for. I've said that the ticket sizes are small, and there is also a chance of imitation. So whatever you do, make sure your product or services are patented, because some people just troll these sites to see which product they can easily copy, who's doing a cool thing and they can copy. So be wary of that. And of course, read the fine print. Check out how much money you need to cough up upfront, how much money you need to give as the rate that they'll take. And people have some hidden charges, so just be wary of that. For the fund platforms, not funders, for the platforms who are doing this, have a look at Kiva, have a look at Pezesha, which are Pan-African based. So that's a good, those are good ones to look out for. In terms of crowdfunding in exchange for equity, this I think is booming. I've seen just in the past 2 months, I've seen maybe 3 pitch decks of people trying to create crowdfunding platforms. So that already speaks to me, and it's showing me that there is interest, because more and more people are starting their startups for this. And this crowdfunding in exchange for equity is currently worth 2.5 billion, and it's estimated to reach about 5 billion in the next 3 years. It's a very big jump, so that there is a lot of interest in it. The good thing about it is it's free marketing. If you have a good video out and you put it on the platforms, you do get noticed, and it's free marketing for you. And of course, you centrally manage your investors. You can ask for big ticket sizes, and it's a good place to get your product or idea validation. By people getting interested in your product to fund you, clearly speaks to you that you have a good thing going. So it's a great place to get your ideas validated. The cons is that you'll give up your equity. I have seen it work best for people with products. I haven't seen it working so well with people who have service-based, who have their business as a service. People relate well to things that they can see, things that they can touch, they can feel. And usually when I tell you, hey, you're buying this phone, it's easier for me to sell you this phone that you can see than me telling you, okay, now I have this system that's going to do this and this and this. If I'm not the end user, it completely goes over my head. So I've seen it working best for people with products. Even though this is new, it's in its nascent stage. It's changing and it's growing, which is good. You need a lot of prep time. You need a lot of prep time to prepare videos, to make sure you have all your ducks in a row, because people will come with questions, and you will have to be prepared to talk to about 100 people who have questions about your product or service. Also, preparing that crowdfunding campaign takes about 3 to 4 months to do it well. So give yourself enough time if you want to do it, and you do it well. Get a brilliant videographer. Don't go with your camera phone and take a video of your business. Do it proper, and you'll get the investment that you need. With crowdfunding platforms, we've seen the successful one starting the crowdfunding campaigns with investors already committed. So you go in, the best ones, you go in with already 70%, and you just need the 30%. So there's a lot of groundwork that needs to be put in place for you to even start that campaign. Make sure you go in here, because everyone can see you. Make sure you go in here with the patent, with copyright, which will give your investors comfort, and that whatever they're investing in will not be copied immediately after. Make sure you have copyrights for everything that you put on that platform, because it is visible to absolutely everyone. Keep in mind the fees. This is high pressure. They just give you a month to close your crowdfunding campaign. And these days, like earlier on, you could start your crowdfunding campaign, and before it's over, and maybe you see you're not going to hit that target, you can edit and change your target so that you hit it and you get all the money. If you don't hit your target, you don't get all the money. You don't get any money. So it is high pressure for founders for you to hit the target so that you get the money. These days, there's some platforms like, I think Cedars, they have locked it. Once you go in with your target, you either have to complete it or not. You can't edit it again. I don't know if they've reversed it. I hope they do. And there's also reputational risk. If your campaign is not successful, it speaks a lot about your business. Why weren't you successful? And investors will shy away if they have seen you in a crowdfunding platform and you were not successful, and now you're back asking for more money. So it raises questions. And in Africa, there's still lack of regulatory clarity. There is an association, a crowdfunding association that has been put together to work on this just this year. So I hope in the next coming years, we'll have that clarity and get everyone, working in the same space. Good platforms to look out for is Thunderfund. I think it's brilliant because you can post your funding round with whichever currency you want. If you're raising in Rand, if you're raising in cedis, you can do it that way. If you're raising in USD, you can put USD and people, give you funds in USD. Uprise Africa is also good to have a look at as well. I think this is the last one. Revenue-based funding, which is basically getting a loan. And this is dependent on the revenue of your business. So you have to be revenue generating for you to get said loan. There has been an increase in credit demand by startups, and the commercial banks are slowly designing their loan products to suit startups, because right now, most commercial banks have loan products that are not suitable for startups. The Standard Chartered Bank had an accelerator for women founders, and at the end of the accelerator, women could get access to a Standard Chartered Bank loan. And they had 35 women in the cohort who participated. And at the end of the cohort, only one took out the loan. And from that one who took out the loan, so they've had only one person taking out the loan, and they've had one default. So the only person who took that loan defaulted, because the loans are not designed for startups. But right now they are changing. I believe from next year, we'll see something very different. There is an increase in gender lending. Standard Chartered is doing it. Absa Bank is doing it. There is also an increase in green lending. So banks lending to startups who are doing climate smart or climate resilience kind of products and services. Those ones are very enticing for the banks to fund. And of course, there's higher digitization. So everything now is through your mobile phone. You can do everything quickly. With banks, you retain your equity. They don't interfere with your business at all. It also helps you build your business credit. If you're able to take out a loan and pay it back, your credit score as a business goes up. And it is very good if you have a business that has high turnover or cash flow. But on the con side, it is hard to qualify as a startup, because as I said, most of the products are not designed for startups per se. They still have high interest rates, and I hope that those go down. And if you have a high turnover business, there's a risk of losing your assets if you default. The application process is also very lengthy, and VCs kind of approach you with caution. If you come to raise VC funds and you already have a debt, it comes with a bit of caution. You'll have to explain why you took out the debt, how long it would take you to pay back the debt. Some of them will tell you to come back once you've paid the debt, because they want to invest in startups that have a clean slate. So just be wary of that. If you have, all the cash that you get, the cash that you get from the bank that you invest in your business, you have to use the profits that you get from your business to pay back the loan. So you get less money to reinvest in your business. So you need to also pay attention to that. And I've told you, these loans are not designed for smaller startups. The people who are giving you loans, of course, the commercial banks, I won't name all of them. MasterCard have a very good fund for SMEs and startups with 0% interest. So they work with, I think MasterCard and African Development Bank, they have 0% interest rate for startups. They work with specific commercial banks. So have a look at which commercial banks they work with. European Investment Bank also has a fund for African-based startups. Finally, I think now the question that you need to ask yourself is, which funding option is good for me? And for you to answer this question, make sure that your vision and your objective for your business is super clear. Know where you want help with from your vision and objectives. So if you want to be, in 5 years, I want to be at this level with X number of customers, then now work your way downwards. So that means I'll need to raise X amount. And what am I willing to give up? Am I willing to give up equity? Do I want to take a loan? Will I be able to repay back the loan? Do I want to go the crowdfunding way? And once you have the big picture, you need now to have a vision grounded in an actionable plan. So questions you need to ask yourself is things like, what stage is your business? What are your financial goals over the next 12 to 18 months? How much capital do you need to raise to achieve those goals that you have put in place? What will you do with the money that you get? Usually at the end of your pitch deck, you say, I'm raising 450K for X, Y, and Z. Have it very, very clear. What key milestones can investors expect you to achieve over the next 2 or 3 years with the money that they've given you? And what are some of the big milestones that you'll achieve in 12 to 18 months? So break it down. You have the big picture, and now break it down. What are your immediate goals? So that will get investors more excited. And what can you do? How can you use this money to increase your valuation? So have a think around these funding options, and hopefully I have given you enough information to help you make an informed decision. So if you have any questions, please feel free to reach out to me. I'm on LinkedIn. I'm active on LinkedIn. So if you want, you can drop me a message, and I will gladly answer it. At Athena Fund, we are a women-based fund. We are focusing on women tech startups. If you are a woman in technology, please reach out. Let's talk. Yeah, thank you so much. If you have questions, please let me know as well.
Fantastic. Thank you so much, Angie, for that very detailed, honest presentation. And there's just lots of good stuff in there. I particularly liked how you started with the high level, the trends in the space down to the detail, the pros and cons, giving us some ideas of existing resources to go to, as well as the thoughts on considerations for deciding which funding is good for you. We had a few questions already in the chat, and I wanted to first of all maybe kick off with mine, just because I have the microphone now. But yeah, I mean, some of them, like I think I remember there was, when you were talking about, I think it was equity crowdfunding, where there was like 3 pros, but the cons, the list was long. So it's just like, I think you've kind of really you've talked about it when you were giving the tips, but is there a link between, I think going a bit more in terms of, sometimes it's about specifically us looking at our business and what will work for us, but is there a link between, say, phases of where you are in the startup or the sector you're in, like just linking those things together, in a more high level thing? Because again, it's not good, when you were saying, I think with the equity, you were saying there's reputational risk. It's one of those, like, if you do it publicly, then you fail, then you've already kind of given this outward perception of your business as it not having enough support. So some of them, you don't want to try it out first and fail. So I guess I was just asking it just in terms of, somebody trying to think through from the beginning, where do I even start? Where would you go in terms of like the lower risk ones and then this, or where you are in the business or what sector you're in? Just a thought to sort of tie it together in terms of where would somebody start?
So I would say, if you are, the lowest risk, I think, is grants. Please explore grants as much as possible. Even if you have, grants can be used even if you are at the idea stage, right? So you don't have to have a developed product, but you have this brilliant idea and you need to test it. There are grants that just give money for testing. There are grants that just give money for research. You want to research whether, stimulating the ear can affect stress in kids, because you have a product a wearable product that is going to, sorry, I've just talked to a lady who has this amazing product about, anyway, linking the ear with a wearable product in the ear with reducing stress. That's why I'm giving this example. But, using a grant to test whether, to do a research whether wearable products actually do affect stress, you can get grants for that. So it's an easy place to start with. Please have a look at fundsforNGO.org. They have a long list of grants that are running all over the world. If you subscribe to the premium service, they do give you extra resources, and you do get to know who is, which grants is out first. So we'll have a look at that. Grants and challenges usually focus on SDGs, and especially in Africa, that is, especially in agriculture, education, health, and financial inclusion. So whatever you're designing, maybe it's even an e-commerce product, but you've seen a grant or a challenge you want to apply for, then how do you tweak it to make sure that it is touching on education or agriculture or health or financial inclusion? Maybe your e-commerce platform, you can link it to financial inclusion of the traders in your platform, and that becomes something exciting for the grant funders. I would suggest everyone, please join an incubator or an accelerator. Don't try and do everything by yourself. So start with incubators and accelerators, and then go with grants. And if you can, please do find specialized accelerators. I think Absa Bank has accelerators for, it's Standard Chartered that they have, besides the women one, they have the accelerator for financial services. Try and find specialized accelerators that I think will be more helpful than having these generic ones. Although even in the generic ones, you do learn quite a lot from all the other startups in your cohort. I remember in the Cambridge Accelerator, I was working with, there was a guy in my group who was producing insect-based proteins, food. So you have burgers made from crickets and meatballs, but made from, I don't know what kind of bugs. But I was able to link him with a guy who